Ladies and gentlemen, welcome back to Fintech Decoded with Musheer and Monica, decoding themes, topics in fintech and digital payments, which you would want to understand more about and what we want to learn more about as things change and accelerate in the modern world. With me today is my co-host, Monica Jesuja. Monica ji. And our guest, special guest, founder and CEO of Xweave, Mr. Milind Sanghavi. We both, all three of us, or rather both Monica and I know Milind from quite some time. He's had a wonderful journey in the payments world across multiple institutions. Even having one of whom on your CV would be great, but has the star-studded CV if they were. I will let him introduce to us about Xweave and also what he's been doing previously. And then we'll dive into the world of the stable coins that are the talk of every table in a financial building everywhere, right? It's anywhere, LinkedIn, Instagram, Twitter, wherever I see the algos are caught on to the stable story. So that's what it will get. So,
Hey, Musheer. Hey, Monica. Good. Happy to be here. Thanks for inviting me. Always a fun chat when we end up chatting, all of us, in very different circumstances. I have to say, officially, Musheer's never been that nice to me, calling me Mr. Milind Sanghavi, but I'll take it, Musheer.
Milind Sanghavi.
Yeah. No, but look, it's always fun to kind of sit and chat and talk about all of us have got very unique experiences and pretty deep experiences across the payments industry. And, how do you bring reality to something that's new? For Xweave, like I'll say this, we're trying to build an exceptionally boring business, right? And what we're trying to do is build an orchestrator that essentially moves money fiat to fiat, but is powered in between by stables. And I would say right now, powered by stables, there's potentially a lot of digital assets that will come across time that will power it. I think for us, the main part is when you look at the non-G10 corridors or the global south, whichever way you want to describe it, there's a lot of inefficiencies in the way money moves. And that's a pretty dangerous comment, right? Because there's some pretty rock star CEOs who've got a lot of experience more than me, or a lot longer experience more than me in being a founder and a CEO, who disagree that stables is the future. I think for us, the way we look at it is there are very specific problems that we want to attack in the Web2 space. But for us, we also look at it as there are strengths in the Web2 space, there's strengths in the Web3 space, and it's about bringing something like a 2.5 together. And so for us, we came out of the MassX incubator last year. We've been building away really quietly, almost too quietly, as Musheer, you told me at some point. And we went live with our first client in December, and we've announced our fundraise, our seed fundraise. So yeah, it's been a super fun journey, and looking forward to talking more about what is the hot topic of the moment, for better or worse.
I mean, great journey and congratulations on the fundraise and the organizations that back you and have been kind of your co-founders in your journey, as it were, right? So maybe starting off with this conversation, we throw a lot of terms around, and stablecoin came about as a term. Locally here in Hong Kong, some of the people I know from the payments world, I'm a payments novice at best, and would always say, oh, stablecoin, Hong Kong dollar is the original stablecoin. So I'm like, define, what do you mean by this? And essentially, we're talking about pegged currencies. In this case, the Hong Kong dollar being pegged to the US dollar. And whenever a new Hong Kong dollar is issued by the Hong Kong Monetary Authority, who are also the de facto central bank, there is a US dollar equivalent to back it, right? Obviously, not issuing a single US dollar, but in multiples of millions or billions. So how are you both seeing this concept of pegged currencies and why somebody needed a pegged currency? And I think that could be a good way of kind of decoding stable coins, right? Before stable coins is stable money. So why do we need this? Thoughts, views. I want to talk about something else just a little bit more on that, but Monica G, Milind, whoever wants to go, please.
Monica, take the first shot.
I think you should, but I have a very limited view on this simply because it's become, I've always stood against it. Simply, this was a talk about a quarter ago when Mr. Trump had just come in. And of course, there's a lot of conversation about why we need it versus why we don't. But the one thing that really I understand from this is the de-dollarization efforts that are required. And I've been reading a lot since the last quarter. And everything always comes back to the dominance of a particular currency and how everything needs to be done and is going to be mobilized in order to protect the interests. And it's very clear that there are various efforts because more and more countries are in the free trade I would say phase where they're creating as well as administering on certain trade agreements. So I look at it more from a payments plus trade perspective than I look at it as a payments problem. And then I looked at cross-border payments and I've been asking myself how this will solve. So today is that day when we can actually ask and work with Milind to understand and unwrap this. But from my perspective, I think the domination of the currency, which is the USD, and secondly, pegging into and thereby offering customers. And this is one of the very unpopular opinion that I have. But I think banks are going to operate in this market simply because they don't want their customers to go and try out different ways of being able to access crypto. And this is one way that they can not just be part of the game, but they can actually hopefully be leaders. And that is why we also have the card networks. And Milind, you would agree. Most of the card networks have a play in this. Nobody knows why, but they're still having a very, very large play. And that's how I'm seeing this worldview. But I would love to hear how you guys think about it.
Yeah, sure. Wow, there's a lot, right?
Yeah.
So I think when you go to the pegs first, like let's break it down. I look at the pegs as a control on trade, right? And you know, if you wanted to manage a certain amount of trade and ensure that a certain amount of value got delivered down or up the value chain, whichever way you look at it, pegging to the dollar made sense, or pegging to a currency made sense. And in some cases, it's a band, either a wide band or a tight band. In some cases, it's literally a one-to-one, or the peg stays forever. So you know, I think it's always come down to, in my opinion, like pegs have always been a function of managing cost or managing income, right? Of the people that live in that economy and trade in that economy. I think when we go to like what exists today, I actually, Monica, and I'm going to say this, right? Like, I don't think I was necessarily a big crypto maxi, and I'm still not a crypto maxi. But I think when I look at stables, I look at them as having a certain amount of strength of the blockchain crypto world, but not having the, well, let's go back 2 quarters, not having the overhype that existed with the meme coins and the cryptos of the world, right? I mean, you know, do I think of BTC as a powerful element? Absolutely. Do I think of stables as a very powerful element? Absolutely. But then you've got the crazy meme coin stuff, which obviously, look, the world needs it, it has it, it uses it. But I think it's really important to break up all of those kind of things into different boxes. And I think, to me, as somebody who's been in payments a pretty long time, I certainly feel like the maxis made so much noise in this space that you always thought of it as like, no, this is all crap, right? It's not tethered in reality, interestingly tethered. But the point is, I think that, you know, we should talk through some of the advantages. And I also think, right, like, Monica, you and I came from the networks in some format. You know, every time somebody says like, this is the only way money is going to move, somebody figures out a QR, somebody figures out a tap, somebody figures out a swipe, like whatever it is, right? I don't think we live in unipolar worlds, and I don't think usability comes in unipolar kind of worlds, right? So it's going to be, I think this is a thousand flowers bloom. Like, you know, not to plug Xweave, but like for Xweave, we've made it asset agnostic, right? So we price in real time across multiple assets because I don't know what the world is going to be in the future. And we want to be ready for it. But you know, I think, Monica, you've raised some points, so we should certainly go back and peel the onions, as they say.
Yeah, I think that detaching it, that Milind, that you mentioned about crypto versus money on blockchain. I'm going to use that as a very loose term, right? But I think
Yeah,
that's a
sure.
good way of kind of like, I won't say tokenization just yet, but let's just say money on blockchain. Right? And that's probably that distinction where, as I jokingly say, stablecoins is to traditional bankers and, Gen X, what meme coins are to, the Gen Z.
Yeah.
And we are caught in the middle as senior millennials. But in that element, what I mean by that is it excites people in the traditional finance world because there is talking about money, you're talking about a new way to move it. And this is not a crypto story, which is now being clarified. And three things I want to touch upon, right? One, when we're talking about the stablecoin in itself, and for the audience who are not maybe as in depth with looking at stablecoins, why I brought the peg story is, ironically, probably the first major stablecoin in the world was the US dollar, right? Which it was for about
Gold
50 odd
pegs.
years with the
Yeah.
gold peg, because you could only issue the number of
Yeah.
US dollars based on the amount of gold you had.
Yeah.
Then you had the Bretton
Yeah.
Woods Agreement 1972, and we've been 53 years now. And that's when the deep peg happened, right? And then that's when inflation
Yeah.
started. And there's a whole bigger conversation on macroeconomics, which I'm not going to get into. But that was the
Yeah.
situation, right? And that
Yeah,
managed,
absolutely.
that went through, and people at that stage, the trust was gold. It's all a lot to do with trust. What commodity is universally accepted, and the
Yeah.
value which is universally accepted, and do you trust that value to be consistent across, right? And hence the gold was that story. The US economy in the 1800s wasn't the number one. It was Britain, for that matter, and
Yeah.
US started coming in from post World War I, essentially. So now when you look at 1970, post World War II, when US became the dominant currency and everything else, and the largest trading partner, then it became a question of everyone starting to reference their currency to the US dollar so that trade becomes feasible. And now I'm extrapolating that in some senses and bringing and saying, when you think of the crypto stable coins, the first kind of use case was, we want to buy Bitcoin. My bank is not going to allow me to do it. My payment player is not allowing me to do it. And it's all priced in US dollars. So how do I do this? And then Tether said, okay, we'll figure out a way. Why don't we give you a digital dollar in simple terms, or dollar on the blockchain? And then you can go buy this blockchain, everybody else, and all the others will accept it, right? And buying that, your bank will not necessarily have a problem because you're paying $1 to get a digital dollar. In some senses, that was the overall conversation that started happening. And payment rails versus saying, oh, I'm buying Bitcoin or I'm buying dollar. Okay, fine, right? And that story, I think, is where that unlocking starts to happen, because the need was, I want to get to do something with a stable value so I can have my reference and I can access it through US dollar, because then I know how to buy the BTC. I don't have to worry about the kimchi impact and, the kimchi, which for those who are
arbitrage.
is the arbitrage where the price is much higher in Korea versus offline. Same with I don't know what they call the Indian arbitrage. Is it a masala arbitrage or something like that?
I didn't even know that existed, but I'm sure.
Let's call it the masala arbitrage, or
we're going to hire a trademark lawyer after this, Musheer, and trademark it.
Masala.
The masala arbitrage. But long story short, what I'm trying to drive is, I think that's where, in some senses, it answers the question of why that was there and why people didn't want to look at stables at that time, because they were like, this is fueling crypto purchases, and it's not got any other utility beyond that, largely speaking, right? 10 years ago, we're talking about, not beyond that. And now in the last 5 years in particular, a lot has changed. And what would you say, like, Milind, the catalyst for you to leave what you were doing with some very, very established major players in the world, having seen all of it? And we're not talking about very traditional firms who haven't changed their ways. You're talking about some of the large big techs as well, whom you worked for, right, on the payment side. So it was as cutting edge in the payments world as it got, almost, right? So to drop that and say, hey, let me get into this, what made you feel that that was the moment for stables, which
Yeah.
created a market opportunity, and for the people who have backed you to feel, yes, this is the right moment as well, or going to be soon?
Yeah, I mean, I think, look, a lot of this starts obviously with my background, and it's when you look at what Libra tried to do and what DM tried to do, and eventually what Novi tried to do as well. Um, for me, though, it was really, we didn't start with stables in mind. We started with like, hey, there's a TradFi problem essentially, right? Which is money's not moving as efficiently as it can. And Monica, we'll go to your point on the last miles, right? So I think there's certainly something to be solved there, and that's where I believe that the 2.5 vision actually works better, right? Because there are some strengths, and let's not throw the baby out with the bathwater for the new, cool, whatever, sexy thing. So I think for us, we started by saying, look, where is the problem in cross-border? Why is it so fat, right? And I'll put fat in quotes. And how can it be more efficient? And look, if you have a ton of balance sheet and you're somebody really big that's banked by the biggest banks in the world, you don't really have a cross-border problem. If you're moving USD to GBP or USD Euro, you don't necessarily have a problem, right? Like, and I'm sure you'll find somebody else who says stablecoins is the future, like you need to use it in every corridor. I think for us, it was very clear that like there were certain corridors, global south, you call it, I call it non-G10 pairs, whatever it is, where there was this need on pre-funding, and the amount of money that was kind of going into it was certainly pretty painful. And so we wanted to kind of figure out like how to solve it. And so we started with a problem statement when we went into the incubator, when I went into the incubator, and said, look, like let's peel this back. Like, okay, how do you solve it? And obviously somebody really big like Lightspark was solving it using BTC. And we said, okay, that's one way to do it. And if we took some of the learnings of payments, which is a payments processor that's asset agnostic, that's like a JustPay or a Plaid in the US and JustPay in India, just for specifics, and say, look, how are they solving this problem? And you can create a kind of network of networks. And so we didn't start with stablecoins. And in fact, I'll tell you, right, like even when we started our fundraise and we had landed on stables, a lot of people looked at us. The Web3 guys all looked at us and said, you're not pushing the envelope enough, right? And the Web2 guys still looked at us like, nah, that's crypto. So I think the reality comes down to who's going to bring utility to these things. It doesn't matter. Let's forget about stables. Let's talk about any types of payments. It's the same thing. Like somebody started building an NFC reader. Like I worked on tap to phone in its very, very early phases, and everybody had, a large terminal company said, no, that's never going to happen. And the reality is the terminals still continue, the tap to phone still continue, and different paths still continue. And so for us, stablecoin was where we ended up because they helped solve a problem around cross-border money movement through it without agent banking. But I think the reality comes down to, in my mind, there's a lot of revisionist history out there, right? Which is suddenly everybody is a stablecoin from, like visionary, whatever it is. I think this comes down to, it doesn't matter who's a visionary and what stablecoin does or doesn't do. Can you actually add value? And can you do it in a non-regulatory arbitrage way to solve a problem, right? And I think that is the biggest progression I feel has happened is, I remember in the DM days when we were talking to certain regulators, their openness or closeness at that point versus where it is now is a massive shift forward. And look, if you want to go after existing Web2 flows, we're going to have to figure out a way to play nice with everybody that's in the ecosystem. And that's why the regulator decides what's clean and what's not.
Milind, this is the question that I think all of us are trying to figure out, that we're always trying to throw technology at some problems and we say it will fix them. In this case, I think everybody agrees, and this is what you just said. It should be solving some problem. But then what is stable coins an answer or a solution for, which is better than what we have today? And what are those specific problems that it can help solve better?
So I think of it as transference of value, right? There's a reason we moved from rocks as currency to paper as currency, because it became more movable. There's a set of the stablecoin world that believes that the future is programmability, and therefore programmability is what drives us. I look at it very simply in today's world, in a very small kind of sandbox. And I don't mean a payment sandbox, I mean playground. I would say that how do I transfer value between player A and player B in across borders where funds actually show up in real time? And you're going to look at me and say, like, no, no, the RTPs exist. I mean, we, we've seen this, right? The RTPs have been trying to interconnect for a very long time. And if you take PR aside, real value aside, is that really working at the speed that it can? It's not. And I think where interconnectivity of the RTPs exists, great. That's not where potentially stablecoins may not solve it. But I think, again, right, like it's really important for us to not throw the good idea out because it's different. I think it's important to say, like, we look at very clearly as there are going to be different types of stables with different liquidity behind them, and that can price very, very tightly across specific corridors, right? So today, if I'm operating in a quote unquote high deflationary corridor, or where I'm holding exposure in a currency that is a deflationary currency, a stablecoin solves a very specific problem of instant, immutable, potentially programmable in the future with more depth built into it, where I can move value between across borders in real time. I think the problem that has happened in the past, in my perspective, is how do you do it where there's no regulatory arbitrage, right? Where you follow every rule.
Can I double click on
Please.
the regulatory
I
arbitrage piece?
think I hit a light bulb. So let's talk.
Yes. Can I hit on the regulatory arbitrage? Because I think the value that everybody thinks stablecoins is able to bring us is because there is no regulation per se. Of course, there is the Genius Act which has been passed. I would love to hear, and Musheer, I want you to hear from you as well, being an ex-regulator. When regulation comes in and there are safeguards, and therefore there is that limitation based on which you operate, the territory has been defined. At that point, will stablecoins still be as attractive to solve this problem?
Also, I'll touch on the regulations maybe just very quickly before, I'm just fascinated and listening to this as the kid in the corner learning from the two payment Maharathis. So I
us
feel
old, but
one
yeah.
of the triggers for a lot of the CBDC and policy and regulations around crypto was a stablecoin, which Meta tried, erstwhile Facebook, with Libra, right, which was meant to be a basket of multiple currencies and a monetary system managed by Meta, along with about 10 plus very large payment players and tech players, right, including PayPal, MasterCard, and a few others. MasterCard or Visa, one of the two was involved, right?
Temasek and Temasek.
And Temasek. So you then had a lot of credential, but that meant central banks now may lose the ability to manage monetary policy at that level, and cross-border payments happening and being run by a tech provider very easily, right? And at that volume. And a significant number of Facebook's users would be the underbanked. As an example, if you take Southeast Asia, and we're talking 7-8 years ago, so statistics or quotes would be here, under more than half of the population in Southeast Asia was underbanked, or unbanked rather. But 90% of them were using Facebook or social media, right? So they would naturally be attracted to something like this, which they were on all the time and they were using. So that kind of drove the CBDC story and the regulations. And now what's happened is the Genius Act is not actually the first stablecoin regulations. You actually have already had MiCA, which is Europe's crypto regulation, so markets in crypto assets regulation, which has defined e-money tokens and asset reference tokens, right, which covers stablecoins as well. Singapore has had under the DPT as well in stablecoins. Yeah. UAE is already licensed a stablecoin player as of 2 months ago, right? And then Hong Kong's regulations, or the law has passed and regulations are going to be in effect from 1st of August. Plus Japan, Korea. So a bunch of the others are already in conversation, UK as well.
Philippines as well.
And Philippines as well. So it's now, it's just now in the process, right? It's now they first first focus for regulators was, let's figure out regulating Bitcoin and crypto trading, because that's the biggest risk or contagion and whatever money laundering, etc., etc. Let's deal with that. Second, now they're moving towards stable coins. And next, I think there'll be a lot of conversations on DeFi, but that's from a regulatory perspective where we are. And I actually think that's one of the reasons why a lot of the banks and institutions have started looking at stables, is because they now can, right? And just as an extension, the world's largest stablecoin operator is Bitfinex, which runs the US dollar Tether, USDT, and they have multiple other stablecoins as well. But that's the one that market cap of 140 billion dollars in circulation, and then volumes that go into trillions of dollars, right? We have the numbers on it. While Circle, which has about 30% or less than half or half of the circulation that Tether has debuted on the IPO 2 weeks ago and is up about 700%, right? Its forward multiples are in, or they're trailing whatever multiples are in hundreds and thousands. So that's just, and the main thing about Circle is their branding and their story is that they work a lot within the regulations, work with institutions. Coinbase is one whom they have aligned with significantly, but largely meant to be this conversation where they are with many regulated frameworks, and that's a selling point. So coming back to it, I'm saying that has seen as an attraction for the market, and PayPal got into it earlier this year as well. So yeah, I'll leave the rest to Milind. From the regs perspective, I think it's a green light for TradFi to come in.
Yeah, and I think, Monica, in your statement, if I didn't misunderstand it or didn't mishear it, like what you said is, will stablecoins still be valuable when there's I think you said there's no regulatory arbitrage built into it, or there's more different. I actually think stablecoins are the cleanest, right? I spend a decent amount of time talking to regulators in specific markets. I think we don't see a problem specifically on stables. I mean, also, by the way, even when you talk about stables, there's three to four different kind of angles on it, right? There's the Circles, the Paxoses, the PYUSDs of the world, and but then there's also the algo stables. So let's put the algo stables out, right? And because I think the algo stables have a different set of opportunities and different set of challenges. We don't see any issue if you look at all of these markets. I mean, I'm in the UAE today. The UAE, in Philippines, they had their vast regulations 5 years ago, I think 4 to 5 years ago, when they were already giving out licenses. So I don't think regulators need to actually give out a local stable for stables to be clean, right? It's about what are you going to create in terms of the controls and the processes around whether it's DPT in Singapore or anything else. We find that stables are probably the farthest away from any regulatory arbitrage. You can actually track where every dollar is stored, right? You can track where these guys are banking with the largest players in the world. Even in Tether's case, they bank with Cantor, right? And Circle's got very, very openly describes how they hold their funds. But so we don't see any regulatory arbitrage at all. Now, there are some markets currently where you are right now based or are like, we don't see a regulation yet. There's a wholesale CBDC that's out there, different use cases onto it. I think, as I was saying earlier, like this doesn't come down to whether stable is the next thing since sliced bread. It comes down to how are we going to build more and more utility around it, and filter out the noise versus actual kind of end game plays. You can look at a JPM coin. Is that a stable? Is that not? Arguable. I think of it as stable. Maybe you look at it as programmable currency. The point is I think of it very simply as transference of value. If I can transfer value for a tokenized blockchain powered asset, then and then there's regulatory like clarity with no arbitrage into it. How do you build a business around it, and how do you solve real world problems?
Interesting. And then I have one more question, which I'd love to be able to double click on, simply because I'm more interested in how banks are going to react to this, or they're already reacting, other than, of course, issuing their own stables, etc. And we've heard that story. I'm more interested in understanding how, legacy infrastructure and what we built out has been one of the bedrocks of how the current foundation of how payments and money movement works across the world. How much of new infrastructure needs to be built out versus how much of legacy is continuing to get used? And therefore, how will the incumbent players be reacting to all these changes? Where the bridge between the previous to the and what I would say current to the future has to be actually we have to reduce the gap. So how do you think that is going to get crystallized through these next few quarters?
And if I may just actually supplement that
Yeah.
question for you, right? I think it's also when we think of the transformation from banking as it was in the 90s and 2000s to the last decade, which is also digitization of money and digitization of payments and everything else, to the blockchainification and, as you call, orchestration of payments, right? Is there a significant difference? And I won't prejudge or add prejudice and say yes or no, but would love to know how you think, whether those are similar or there's a significant difference. Just supplementing to the question that Monica had.
Yeah, I mean, I think you've got to break it down to how the FX markets work today, right? And how does money movement work today? In some corridors, there is no problem, right?
Correct.
At least in our perspective, in my perspective. I think in some corridors there are massive problems, right? And I think somebody used the word bridge. Like that was the tipping point that we saw, which is we'd been building since January of last year. It officially spun out since April of last year, and nobody wanted to talk about stables till Stripe made their move, right? And they've obviously shown some massive dreams and what it could become. So I think you guys are both right, and I think we're aligned on the fact that I'll call it legacy, but existing infrastructure, let's call it that, has strengths to it. And last mile is where every payments thing dies, right? Let's be honest about it. Last mile in, when you say last mile in or last mile out, whichever way you look at it.
Sure.
And I think for us, we look at that as, okay, there's a very strong last mile that's been built domestically in some markets. Use it, right? And again, I'm sure there's a startup CEO or a founder somewhere that's saying, look, like stables have to be solving for domestic. And I think that is also where we are, right? Is we are in the thousand flowers bloom phase of this entire kind of TradFi meets blockchain world. And there's a very large amounts of shared numbers out there of how much volume is happening. I still think it's early, right? I am always as both of you know, I'm always the contrarian on these viewpoints. But I think that we're all aligned that there are strengths. And I think what has happened historically is that the Web3 people have been kind of sidelined by the Web2 guys. Were saying, oh, you guys are a bunch of cowboys and cowgirls. And those guys are looking at the Web2 guys saying, oh man, you guys just don't get the future. And the reality is each side has validity in their points. And that's why we think of ourselves as, an exceptionally boring Web3 company and a relatively cool Web2 company, but somewhere in between, and trying to find the advantages, right? I think it comes down to advantages. I mean, Monica, I'm fully with you that legacy infra is strong. There's a reason why pipes have been built. But if you let's look at UPI as an example, right? Like you have a player like JustPay that is actually orchestrating tons of volume on it and is building the spanner or the network, whatever you want to call it, right? That internodally connects all of it. That's what we are trying to build, right? So it's, you can call it a stablecoin marketplace, you can call it a stablecoin optimizer. We look at it as we want to move money more efficiently. Stablecoin is the asset that works today. And we want to do it without any regulatory arbitrage. We want to settle in near instant kind of time frames. And in some cases where the RTPs are pretty strong on the edges, we'll use the RTPs and then basically interconnect the RTPs as an orchestrator. And where they don't, we'll figure out what network exists and use it, right? And the reality is domestic payments are being looked at by every regulator to come into what I think of as money needs to move better in 2025. I don't know if that answers your question. I'm happy to go into more in depth.
It does.
Yeah.
No,
I think you're
sorry,
both saying the
Musheer.
same thing. Yeah, go for it. I think you're both saying the same thing. Go on. Yeah.
Yeah, I was just going to say absolutely. I think these are the points of view that I think should become a little louder, because everybody just talks in extremes of this versus the other, and we're actually
In
trying to
both
solve
sides, on both
it
sides.
exactly. And both of these worlds don't want to collide, but they will collide at one point. And I think there's a certain amount of intersection which actually serves the purpose for which these are being built. But I don't think we're
Yeah.
hearing that very loudly now. That's the problem.
I think the worlds are colliding already. Like, I don't think it's a future statement, Monica, in my opinion. I think what it is we see this very clearly now in our industry and even with the investors we talk to. Either there's a bunch of Web3 teams that are building out and trying to go the other way. And there are some Web2 teams that are building out. There are some Web2 teams that are building out. And the reality is the strength exists in between. I also think that some of us are building with like reg and compliance as a product intrinsically from day one. And some people are saying, look, I'm going to just grow big enough and then I'll figure out how to do reg and compliance over time. We obviously are heavily biased in which is the right way, because we believe that if you want to go after the Web2 TradFi flows, there is no room for arbitrage on that stuff. And that's really what we're trying to solve for.
I think that's an interesting point, right? I have a slightly maybe different view to how the two of you are thinking about the worlds colliding. I actually think they're diverging.
Okay.
Right? But with a clear demarcation. And I'll try to clarify that, what I mean by that. It's like they merged and now they're separating, in the sense the legitimacy of stable coins is now there. So TradFi is open to looking at it. But, and I've just, maybe this is a big, bold statement to make. Stable coins are fulfilling the objective that Satoshi Nakamoto kind of wanted with Bitcoin, which is eliminate intermediaries, have peer-to-peer, have it real time, the payments piece, right? That's, for me, is the interesting element. Why? Because I say this often, I say Bitcoin and its philosophy failed because it is not the most efficient way of moving money, right? But what it created was this revolution and everything else. So people start thinking, and it's that OG why everybody put money into it. And what it has now become is an asset class. You're investing in Bitcoin because you see it as that hedge, because it stands for something that kind of somehow explains your meme coins to the world, right? Which is, it is about no longer about what is the economic value a company is driving. It's what emotional value is this meme giving to me. And that's what Gen Z looks at, right? I connect to this. That's why I'm buying a Labubu. That's why I'm buying a Dogecoin in some senses. But coming back to it,
I do want to see the Instagram photo of you with the Labubu, but yeah, that's a different point altogether.
Actually have one around with you. But long story short, so that's what I think what's happening now is the institutional crypto, right? So there's the institutionalization of crypto happening, which is the BlackRock-led story, which is investment class, right? So invest in Bitcoin, Ethereum, Solana, whatever there is, right? These tokens that represent, who are essentially in some shape or form stocks, right? They're representing an organization. That's what a stock does. Like if you're investing in Ethereum, you're buying Ethereum, it's because, or you're investing in Solana, you're thinking that's going to be the next major infrastructure, right? And they're not listed. They're never going, they are DAOs, they're not listed.
I don't know, you can say never, but yeah.
Yeah, but never, but as I said, like for now, right? Let's assume that's how I'm seeing it. On the other side, stablecoins are all about the blockchainification, the orchestration, using that infrastructure to move money, right? With the various ways of structuring, referencing it. As I said at the top of the story, pegging the dollar is nothing new to another currency, right? You had that with the Hong Kong dollar, you had the other side of stablecoins, which is, commodity-backed stablecoins, which was gold, right? So which was US dollar. So if you don't think of it digitally, the concept was already there. This is now a digital concept. And with blockchain, there are more efficiencies. I'm happy to take it, but this is where I kind of think there's that difference happening. One is investable class, and the other is the payment infrastructure. and hence so much more conversations. And my final piece on this would be why I think there's a lot more conversation is, and you probably will agree to this, Milind, is blockchain of 2025 versus blockchain of 2023 even is much more stable, can handle a lot more volumes, and is more developers in the TradFi world and others who understand this, right? So the reliability and scalability is pretty high, right? It is the volumes that we're seeing is pretty high. So that makes a big difference for you to, go on.
And it's de-risked by regulatory support, right? I think this is the piece we all miss over time, right? Which is the regulatory support is coming. There is an awareness of the strengths and the opportunities, weakness, whatever you want to call it. And I'll say this, right? Like you and I sit here and we say like, oh, BTC is, as you said, like BTC is a commodity. I will find you 20 founders who will say BTC is not a commodity. It is actually, a way of living, right? And I think why does one side have to be right and the other side wrong? It's all of us have to figure out a way to coexist. I mean, it's really hard for me, honestly, to say like this is what Satoshi Nakamoto wanted or didn't want. I think there's a certain viewpoint on it that exists, which is probably correct. And I think stables, like I said, like I don't think this world ends with stables. Like I think stables is just what's hot right now for a variety of reasons. And I mean, the way we look at it always is, can you be more efficient? And there will be opportunities where it is not efficient and where you will have to make hard decisions and not build in that space or those markets or those asset classes, whatever you want to call it. And how do you build where it is actually solving a problem? And I think, Monica, right, to your point at the beginning of the thing, like I'm very clear that this isn't a kind of this solves world hunger kind of problems. I think the thing is there's sniper approaches to solving that we think that can be solved with what Xweave is building, with what stablecoins have, and potentially what digital assets bring over future.
Monica ji, as we go through this conversation, right, and we've spoken about TradFi rails, we've spoken about gold, we've gone all the way back, right? When you've been, as I said, in the weeds of payments, you've been in the transformation cutting edge of payments, as well as the peak with all the big players. When you think of those enterprises, I'm going to call them traditional payment players in some senses, or even the banks who are involved, what would you feel are the key things that concern them about stablecoins?
I think the key concern is disintermediation and taking away space and territory from which has been theirs for a very long time. I think it goes without saying that the biggest problem and therefore the biggest opportunity right now in the world of payments is cross-border. And it's getting a lot of interest. We have governments, we have organizations, we have central banks all working together to solve this problem. And like I mentioned earlier, I think it's a lot about trade. It's about the de-dollarization efforts, and it's also about maintaining sovereignty. So if you consider all that, the network game, and let's be honest, like the biggest Fortune 500 players in our world happen to be three. And all of them are fighting to not cede any more space to anyone else. And I personally believe that the network terminology of what we have built for the last 70, 80 years it's right now the time where we'll figure out whether it's going to break up into certain territories that will be owned by even larger players, or there will be new players that will be born. But that is why I think in the beginning of the conversation, we spoke very openly about how the traditional players are reacting by having some play in the space, but really not really having a clear idea. At least it doesn't sound to us, based on what we are seeing also from the outside. A lot of efforts are underway, but not everything is in the public domain. So maybe from the outside, it looks like they just have a play in what is developing. But what that play will be and how it will materialize, we don't know. And just one last thing, I personally feel that we talk a lot about geographies, which really are at like the top of the pyramid in terms of consumers and also in terms of revenue, and therefore the opportunity problem. But when it comes to certain other countries who completely get left out of the conversation, I do feel that this will solve many a problem. And we can't just think about only about some countries who have particular infrastructures, who have these big companies. We have to think about everything. So, and I see a lot of investment by the two major networks in Africa, for example. So one must ask the question, why is that happening? And what play will these particular technologies have with the networks in those areas and regions?
Yeah, I mean, Visa also has a whole stablecoin page where they're tracking the flows of
Exactly.
stablecoin. That is real-time kind of stablecoin tracker. But just building on that as well, Milind, one of the conversation that keeps coming up is broadly we have kind of four types of, say, digital payment stories now, right? One, electronic payments, let's just put it that way, right? So you have your card and tap, tap, swipe, whatever, that's on one front. And then you have the real-time payments, mobile payment conversation. Then that's evolved into the CBDCs and now stable coins, right? So on one end, you have dozens, if not hundreds, of payment players in each category across the world, and in certain regions as well, where you see dozens in the bigger zones or jurisdictions. But what's your thoughts on, like, how are we this crowding of various forms of electronic payments, right? You're just speaking about orchestrating payments. So before we go to the cross-border versus domestic story, or maybe the answer is in some parts to related to that, what are your thoughts on how we distinguish? And Monica ji, please also just feel free to add on to that, which I feel is a very important conversation. And it could be a topic on its own for a special
Yeah.
podcast, but we could just take a quick thoughts from each of you on this.
Yeah, I mean, I think, Musheer, my view on this is, why do we have to only pick one, right? Because we kind of spoke about this earlier in the conversation as well, is every time in payments we think that this is the only way. The consumer decides, the business decides, the bank decides, whatever it is. And I think as long as you're solving real problems, right, you'll get the volume, and you'll be able to build hopefully really smart businesses around it. I think Monica, don't disagree with you on the fact that, like, why are we only looking at certain countries or corridors? Unfortunately, that's an economic decision, right? Unfortunately or fortunately, whichever way you look at it. And I think that for us, it's also about focus, right? There are 6 markets, 7 markets that we are looking at very specifically for the next 12 months. 6 as P0s, probably, if I add in 0.5, like I'd say like 7. And, I think the thing is about how do you build real value use cases and real value flows, and prove that this problem can be solved, right? And it's going to take a decent amount of silly putty on the wall to say, look, what's sticking. We've already made like a semi-pivot in our story, which is we were going to do only specific markets. And our customers came to us and said, no, we need more markets. So, we're already going into multiple markets, right? And building out the network density as I think of it. So I think that, Musheer, like I am a big fan of, like, let the customer decide, right? And there will be some customers who are like, no, stable's still crypto. And there are some customers who are like, no, stable's not aggressive enough. Like, I'm going to only do, I don't know, an algo stable. That's fine, right? Like, if you believe that's the right thing that helps your business, as long as it solves a use case, that's our goal. I think as payments people, and I say this, right, all the time, like, good payments businesses need to be exceptionally boring. Because they just need, like, when do you realize what payments you're doing? When something goes wrong, right? It's when the trigger goes round and round, or your two-factor authentication fails, or whatever it is. But other than that, it's like somebody wants to pay, somebody wants to get paid. Whether that's cross-border, domestic, it doesn't matter, right? That's just like, that's the fact that keeps all of us paid in our careers in the past. The reality is solve real problems, try and use something that's future forward, that's scalable, right? That's not going to become defunct, and just keep chipping away at the monolith of old companies that aren't innovating, or give them the solution, right?
Monica, what are your thoughts? You
I
also
also,
been this. You've spoken about, like, let's say from an India perspective about the
yes.
CBDC, about UPI and card payments where it is, and now the stablecoin story, which is not yet there in India. But generally, what are your thoughts?
So, Musheer, the report that we wrote right together, there was the
Yeah.
stats tell a story. Like everybody was talking about the death of cards, and now we hear that there is no death of cards. It's the form factor which has changed. Then
Yep.
everybody talked about form factors being dead, and that also didn't happen. So I just feel that we keep thinking about the wars and one against the other when there is actually too much opportunity and a problem to be solved for many different niches and many different categories. So I actually don't see this as an either or situation. It just is about who solves the problem the most brilliantly and hopefully well, so that consumers don't want to look for an alternative. And let's be honest, if stablecoin solves that problem, why will anybody? No, but consumers don't care about the technology as much as we do. We
Yeah.
really feel that everybody thinks about what technology was used by UPI. Nobody cares. They were just transferring their money. They were doing it using mobile banking, and now they're doing it using UPI. But if you ask the consumers, they will tell you that they like it because it's easier, not because they
Yep.
thought that the technology was a super fix. I mean, Milind, I mean, we've seen this across the world, so I don't think any of the
100%.
countries have it any different, right? But I just feel a lot of us sitting in these air conditioned rooms always think that there will be this
Literally.
utopian world where there will be only one versus the other, and these big wars being fought with two islands crossing, and there will never be a bridge between them. That rarely happens. And trust me, if you look at, and I'm just talking about the stocks and the market right now, the market is reacting very favorably to all the people, all the major companies which were supposed to have died like 10 years back, and they're doing really well. So one must question if they are doing something that we don't know about, or they're doing something which is plain and boring, like Milind said, just plain boring revenue economics that makes a lot of sense. And that's the crux of the business.
Yeah, for almost for fun, I was gonna say if payments become as boring as telcos, you're not gonna get the multiples in the stock markets from a PE perspective. So hey, you gotta get
There's a
something
different
from
problem.
PE. Yeah, that's an exciting. I'm gonna digress significantly, but it's a nice story as a segue. In mainland China, you started seeing in say late 2010s these manufacturing companies and others starting to buy some tech companies, right? It's like a very boring chemicals company is buying a payment player or a digital hardware player or something like that, and you start to wonder why are they doing this, right? Essentially, they were used to giving high multiples and dividends to their investors and constantly seeing the stock grow. And as it in natural progression started flatlining, they had to find something exciting. So it was an AI company they bought, or there'll be a blockchain company, or whatever, just to see that boost. And we're seeing that now with companies who are buying, crypto treasury or adding AI to their name just because they want to be the proxy and get on to this. So jokes apart, one other thing I guess is that programmability conversation we were having, right? And as you all rightly said, if you talk to most Android users, they don't really know what's underneath. You talk to most people using Apple fanboy, fangirls, or whatever you want. They like the user interface, but when you get to the technical details of it, it could have been something else, and it would have still been something that they don't care about. Like if you ask people how Apple Pay works, it's technically most people I would guarantee won't be able to speak or to it, right? So, and I guess at the end we need payments to be ubiquitous in being very simple. You just pay, doesn't matter where it lies. And so yeah, I agree. I think it's going to be a merger and different use cases will come in, and that's where the programmability ability comes in. And as and you both can correct me if I'm wrong, I come from the capital markets world where there'll always be this conversation of, oh, blockchain is going to allow for real-time settlement and 24/7 trading, etc., etc. The reality is the tech has been there for a long time. You also could do real-time settlement, all of this. I mean, end of day, whatever you want to do, 24/7 trading. It was just down to market forces and how people, the structures were, and some of the tech, which didn't allow for everything to be validated at the real time, right? So based on that, people were more comfortable, and there wasn't a rush to settle real time. You could do end of day, right? And I feel it's a similar story that's happening in payments now. Is yeah, I mean, as long as the balance shows updated, what's happened at the back end is something that, and the Alipay, WeChat Pay difference to a UPI, where Alipay and WeChat Pay is end of day settlement, while UPI was real time or near real time, right? From that perspective. moving from here, as we get to this, great to have blockchain, great to have this orchestration, great to have CBDCs. But as you know, there's this number that was put, and Effie, shout out to her, where she was highlighting about the treasury holdings by stable coins, right? So if you look at the US treasury holdings by stablecoin companies, largely by Tether and a couple of the big ones, they would rank 12 in that order, and not too far off from the top 10 at the pace they're growing, right? Which then brings to the question, what are the risks we're looking at with stablecoins? And there's a range of that. Milind, your thoughts? And Monica, what are your thoughts as well? And then I'll add my views on some of those things that we need to keep an eye out on.
Look, I'm always a glass half full person, right? So I'll look at it a little bit differently. Like, while there may be some macro, as you're kind of hinting, right? Like, is there a macro move risk or macro risk move there? I actually look at it as, if I told you, hey, this person holds treasuries, or majority of their holding is treasuries, as with your background, you would say, yeah, pretty low risk, right? Yeah. And it's never no risk. Let's also be honest about that, right? And so I think I look at it as, this is a merger of both sides again, which is, hey, treasuries yield a certain amount, and people have figured out a way to give, whether that's staking, yielding, whichever way you want to call it, there is a way for economic value chain to be passed down that has a certain amount of smarter knowledge behind it, hypothetically. I was talking to a private banker today who's like, oh yeah, like, look, I want to bank all these crypto guys. And I'm like, yeah, it's a little more complicated than that, right? So I think I look at it as, the more cleaner the holdings are, the better the play is. Build long-term utility. Again, right? Like, I think if you're doing a 1-year pump and dump, if somebody was doing it, and that's happened, right? That's happened in the Web2 world, that's happened in the Web3 world, both sides. The reality is, look, I think we think of it structurally, how is the game going to change? Or at least how structurally, to the point we were just talking about, how are you going to add an extra option, right? If fiat works, great, no problems. And I think if you went to most people and said, look, if you used X and it's going to be riskier and it may not show up, or you have to pay a little bit more, and you use this and you pay a little bit more, but it shows up, we all know which way the customer is going to pick. Yeah. Right. And I think that's really what it's going to take, both worlds coming together to figure out the strengths, the regulatory stuff, no arbitrage. I think the regulators are moving in the right way. Like, we're very excited about the way regulators are moving. And, we are one of those weird Web3 companies or Web 2.5 companies that are like, yeah, I like the regulators. Like, it's great. Like, bring more clarity, because it makes my sales job pretty easy.
Not easier.
Yeah.
Monica, what are your thoughts? What are risks you're seeing?
I think the only risk that we have is a couple of bad actors really spoiling the party and not solving for what the real use case is, and actually trying to, and it's okay to make money out of the markets and everything else, but I think it just leaves a bad impression, especially in financial services, where trust is the most important factor of why things become successful or why things completely fail. And I think that is where I see the major risk, because everything that is a bubble then tends to fade away when the bad actors in the system tend to make a lot of money, or tend to put the others to shame because of just basic malpractices. And this is where I think regulation comes in, and anything that is regulated suddenly becomes okay to touch, both for investors, for consumers, and everybody. But I think I go with what Milind said earlier. Consumers wouldn't really care about who is doing what. They just want a product that works. They want a product that hopefully provides a lot of value for very little price, and is stable enough that they can trust. Whether it is a product which consumers are using, whether it's something that businesses are using, they only care about these common factors. It's about how we build it out that we get very stuck, and obviously get married to the technology and the various aspects associated with it. But if you ask the end user, they wouldn't really care.
I look at maybe a couple of other risks, and this kicks in from my capital market side of things, which I started with the conversation, right? There's systematic risks, right? And they're twofold. One is, let's just take the larger ones. There's a run on redemption. They need to now go into the markets. some of these stablecoin operators are not regulated because they're operating out of a different jurisdiction, but are holding assets in major markets, right? So Tether is a classic example where they're not really regulated yet in the major markets and holding these billions of dollars of US treasuries. And if they are forced to redeem because there's a run, there's some rumor, there's whatever news that comes through, right? That would have an impact on the short-term interest rates, right? Which then leads to more systemic risks. The other element is what happened with stable coins, which are not a plain vanilla reserve or underlying asset, right? Which is the algorithmic stable coins, which a couple of years ago, as 3 years ago, actually, Terra Luna almost to the day collapsed. This is for the audience, this was a algorithmic stable coin where the stability of the value of one was tied to the value of the other based on a algorithmic balancing act, and then there was redemption that was happening to fulfill one from the other. And when there was a run on money on one of them, and depegging, the other side was not able to keep up, and they were the guys running this were not able to fulfill essentially the request for redemption on one side, and then both fell down and crashed, right? And there's a lot of money burned eventually. That's just an example of what happened. So that's one. And what's happening with the regulations, as both of you mentioned, is we now have a lot of regulators who have allowed stablecoins, largely fiat reference stablecoins, do not allow for algorithmic stablecoins, right? This is a plain vanilla. You then have the commodity-backed stablecoins, gold being the most popular one, which, as you said, going back to form to its origin in some senses, and which has more or less similar risks maybe to fiat currency-backed stablecoins. And the final one is the run on the bank story. And this is the literal run on the bank story, right? So Circle's USD C depegged a couple of years ago when their main primary bank was facing a run on the bank and eventually went insolvent, right? Which then meant people felt Circle will not be able to redeem, and then Circle depegged by more than 12 to 13%, eventually coming back because Circle was able to redeem all of those based on other assets. And now, because you have a lot of the regulations requiring the type of assets that can be held are very narrow, and if people are holding cash only or it is in the bank, and the banks have issues, then because most big banks aren't yet banking these, hopefully those private bankers may want to bank these stable coins, and that changes a bit of the storyline. So I think that's going to be an interesting element of how this will be brought in from Basel, and BIS is going to probably FSB will come in with more prudential requirements for banks who are providing reserve assets. But that's been there. And I'll end on this note of banking. For most people, they feel the money in the bank is theirs, which is not. Technically, their money, they're lending the money to the bank, and 80 to 90% of their money is not with the bank. It's out there with other people because it's being, and that's the model how banks make money. So if you start looking at stablecoin providers as well, that's also going to be a story that we may see in terms of the amount of reserves. But the regulators right now require that 1:1 redemption at very high liquid. So there's not even going out in the market. So in some senses, safer than banks, right? As we close, this has been a very, very productive learning lesson for me, an enjoyable conversation. If you had to think of where we will go in the next year, and I don't want to go crystal ball gazing beyond that. I see too many things moving too fast. What would be the two things you would pick? And we'll start with Monica G and then Milind. What do you see or what do you expect? Two major things related to stablecoin next year.
Firstly, some real world applicability and use cases. So somebody actually is trying to solve a problem which gets accepted, and hopefully some traditional financial institutions backing that up. And secondly, a lot more regulation in a good way, providing safeguards so people want to invest in this space. And personally, there's actually a third thing, which is that countries thinking about non-USD stablecoins as well, and how that will fit in with CBDCs, specifically because most of the countries are going through their pilots. I'm more interested in the last part simply because there will be certain intersection, and then there will be certain use cases that countries, especially reserve banks of central banks of countries, will try to carve out space. And I'm looking forward to actually the programmability elements, and of course some of the de-dollarization efforts that are going on in the BRICS and other countries.
Milind, two things.
Yeah, I mean, I think fully aligned on obviously with where I sit, building real use cases and solving real problems. I think the reality is, when you go, there's a report out there that says like 70 new stables coming out in the next 12 months. What I look at it, and I look at it as stable CBDC, whatever it is, right? So anything that is available on where it can't be just only pure wholesale is where what gets me excited. I think the reality is also about are you going to solve for the P2P side or the B2B side? And there's been too much noise around it, right? So I think the one thing I hope for in the next year is let's everybody just go back to building, right? Stay quiet, build away. You don't need to post 4 posts a day on LinkedIn, right? Like just let's just get this machine moving and let's see whether this thing works. I obviously feel very strongly that a solution like ours has a very unique angle to solving this problem. But there's a lot. The book isn't written yet, right? And I think what concerns me at times about the amount of noise around stables, and by the way, right, the noise around stables started in November of last year, is that it takes away some of the just basics that need to be done right. And as a company that's doing it right, like I'll tell you, one of our competitors that we know, and I put it competitors in quotes, is like using algo stables, right? And they're going and pitching their stuff to customers at potentially better rates. But the point is, like, is a customer really going to figure out whether it's an algo stable or a real stable? Don't know. But I think the thing is like the real companies will emerge over the long play. So I think 12 months might be a short window, actually, right, to structurally change behaviors. And I think the next thing is, just more open minds, man. That's what I hope for and wish for is let's just have open conversations. We don't have to agree all the time. We don't have to disagree all the time. We don't have to have max viewpoints or min viewpoints. And let's just figure out a way where I think just structurally start chipping away. Again, I keep going back to this, right? Which is the monolith's not moving on its own. It's going to take a bunch of us to figure out the right set of partnerships, the right set of conversations, the right economic value chain as well, right? To go attack this space and say, look, we can play in the same sandbox. We can all make a decent amount of money and go figure out a way to scale and solve real problems.
Great insight. I think for me, a couple of things. One, I see more hype before the groundwork, and I actually think it's a good thing in my view, largely because it just brings more attention to it. More people start looking at it, which brings in. Sometimes we are, I wouldn't say, in our own world, but when you are that close to the cutting edge in economies or jurisdictions or among people who are doing a lot of the cutting edge stuff, we forget that there's a vast majority of the rest of the world is still catching up to digital payments, right? And real-time payments. Like forget stablecoins. And we know that there are a lot in the non-G10 countries, as you nicely put it, who are still catching up on digital payments, forget stablecoins, right? And maybe that'll be a leapfrogging opportunity for some of them. So I think that hype will help, like at least shape. Second thing is the regulatory elements will actually force, I see maybe not in the next year, but we'll start seeing that trend already, is the regulators aren't going to be handing out dozens of stablecoin licenses, in my view, right? There'll be a handful, at least in the beginning, you'll probably see 6 to 10 in each major jurisdiction, thereabouts, right? Some may go a little above that, but I don't expect too many for fiat reference stablecoins. What then that leads to is all the others who want to get a piece of this will have to try to think about, are they going to go partner with an existing stablecoin, whether it's a competitor, or try to make a consortium and run things. We started seeing that model in the US with, a lot of people think the Genius Act passing the Senate means the law is been approved. Actually, no. They went the other way around to the typical process in the US, which is it goes to the House, then the Senate as the steps. But here they went to the Senate. Now he has to go through the House, then it'll get revised, and then the president signs on it, and then it comes into law. Probably another 3 to 6 months on that. But long story short, a bunch of US banks decided that they will issue a stablecoin jointly, right? About 20 or 30 banks would decide that. And I think that model is going to start coming up. And I think we had something in Australia and others where people are considering the same story. So that I think is going to be a very interesting conversation where there'll be a few who will get the license and then the others will build around it, right? And the final thing, maybe I'm extending myself. I think stablecoins need to be looked at almost like a product, a financial product that people are offering. It's a payment product, nothing more, nothing less. And everything else is just semantics.
Yeah, I mean, I think pretty spot on. I think going back to all three of our viewpoints, right? To me, it's very clear the fun is just starting. You can call it all the hype, you can call it whatever it is, but the real building will start, or it's started. There's a lot of numbers out there. It's like we went through this, Monica, you and I have spoken about this many years ago, which is all these fintechs keep talking about it, but at the end of the day, they build on the rail of the networks, right? And the thing is, what are you going to change structurally versus where are you going to partner? And, that noise all just calming down. I don't think it goes away. Noise is good. Look, it's great for us, right? Like for us who are fundraising and building a business, we get a lot more eyeballs, a lot more great conversations, a la this thing, this chat that we're having. But the reality is like, look, let's go quietly build and we'll all figure out, and we'll sit a year from now and we'll say, look, we were right on this. We needed to be better on.
Maybe this will be the eventuality will be, which we may or may not want, that Swift eventually gets a new life through the stablecoin networks because the regulators choke it to require something around that end. Or we'll have Xweave buying Swift in a few years' time. So we'll see.
Xweave, sure.
Xweave, sorry, yeah. All right, thank you so much, Milind, and it's been a great pleasure and always a nice to catch up. We were meant to do this last week. We ended just chatting, and now we've finally done this along with Monica Ji and you. So loved it. Thanks once again.
Thanks, man. Nice chatting with you guys. Have a good night.
Thank you. And for the audience, stay tuned for more such conversations. Click like, subscribe, follow us, follow Xweave to see the interesting things they'll be doing. Even though Milind doesn't post daily on LinkedIn, he does from time to time, and very well worth a following. And take care, and we'll get back soon.